Okay. I did get a couple of emails wondering what the Q&As for next month are. As we can see, we've got Wednesday at 11:30. Then from the 12th, they'll be at 9:30. So that's Monday, Wednesday, Friday, Monday, Wednesday, Friday, and then I'll be down in Sydney for some new courses. So yeah, there's a couple of weeks off. That said, oh, no sound. Appreciate that. Right, start again. Yeah, these are the courses for next week. Note the times and the dates if you haven't got the email. But yeah, Monday, Wednesday, Friday, a couple of weeks off. But I will be available on emails if you need me. So I will be checking the emails on a regular basis. So if things go pear shaped, or you've got any questions or so on and so forth, just let me know. Um, I'm just going to cover an email it's out of Melbourne where they're having a meeting on tonight actually, and he says that I should. You know, he gets a lot out of it when I go over the rules or discuss sort of divergence and so on and so forth. I hear that and I'll take that on board and I'll certainly do that if there's little to discuss. However, today's not the day, so maybe I'll do that on Wednesday. But yeah, if there's no very few emails, and a year ago we used to have a dozen or so emails to go through. Even though now I've got a whole lot more traders, 370 odd of you, compared to a year ago of about 220. I'm getting less and less emails, so I'm not really sure what's going on there. Why you guys don't seem to want to send me through your analysis. I'm not that good a teacher, and your results aren't that fabulous either. So there's a few of you who are doing well. Those who send in their stuff regularly tend to show a propensity for better results. I don't know why that is, but it obviously works. Um, so, if I don't have emails to go through, going through the charts one by one, that to me, whilst you all say, yeah, we get great benefit out of that, that's just me handing you fish, saying, oh, yeah, here's an opportunity. Or what I'm hoping for you guys to do is take the education on board and find the opportunities yourself and then present them to me. Which is why I like getting the emails, because I see you guys actually doing the work and finding the opportunities. Given that there's very few emails, then I'm more than happy to sort of go through the rules again and explain what divergence and hidden divergence is, or phase one, phase two, those basic concepts. Yeah. So I appreciate that email, Greg, and I do take it on board. But today, even though I've only got a couple of emails to go through, I won't be doing it today. Got to travel today. Um, right. So the next question before I get into the emails was, and I might touch whilst I'm there, I might touch base on Brian's email about 2015. But there was a question online about my report this morning, which I said, oil is both deflationary and inflationary. The immediate effect is obviously deflationary, even though that takes time to filter through to the economy. It was apparent in the UK inflation numbers. And the comment I said, what happens, or that situation before the kick in the savings hits the bottom line. What I mean by that is that once the people at home, like ourselves, we have more money in our pocket because the cost of going to the petrol pump is not as not as expensive. The cost of food in the supermarkets will take a little bit more time to filter through with the lower energy prices. But the kick I'm talking about is now that I've got more money to spend, where am I going to spend it? It'll be going back into the economy, but that is a lag of some months. It's hard to sort of quantify how many months, but from oil being at $57 a barrel, there's obviously signs of deflation in the global economy from that, but that should turn into inflation at some point in a couple of months. And the further oil falls, then obviously the effect of that is exacerbated. And as I was saying in the report, that the central bankers are now watching this with great interest, because they were looking at raising rates when 6 months ago they started talking about this, both in the US Fed and in the Bank of England. Now that is sort of they're going, well, hang on a minute, with oil down here and potentially going further, the inflation. The higher inflation that we were expecting sort of towards the first part of 2015 may not actually happen until later. So we're not going to be rushing into raising rates anytime soon. But that's what everybody has been expecting with this fall in oil price. It's sort of lengthened the timeline for that. Yeah. Now this article that Brian sent through, I hope that sort of clears that up for you, Karen. This article that Brian sent through to me and wanted me to comment on is a good read, and I have to agree with quite a lot of what was in there. And that's shaping up as a year of currency. Well, we're talking about the flow of funds, really, what this article is talking about. And as they start to raise rates, there is a concern that the back end of interest rates, and I'll explain what I mean by that. The back end of interest rates has been high, and it's been a positive yield curve, whereas now what they're talking about, or worried about, or should be worried about if you're a central banker, is that with quantitative easing and the process they've been doing for the last 5 or 6 years, as this yield curve, as we can see, is pretty flat. So what the Fed has been doing is they've been selling this short end to make short-term borrowing costs very cheap for businesses and companies, and the Bank of England has been doing that, and the ECB has just started doing it in the last couple of months, and the Bank of Japan has been doing it. So they've been keeping lower end rates down by selling these, and then they've been buying the back end. Now that's a positive yield curve, which is generally how most healthy economies would operate. However, the fear is now that with the end of this, and they're looking to raise these higher rates, well, then the value of these are going to drop. So it's then a contango market, and what the fallout effect of that is going to be, no one is really certain. But that's something that needs to be considered when raising rates. That's not mentioned in this article. Yeah, I can send this article out, not a problem. But it's not. Sorry, this is not discussed in this article. Brian's overall question was, what is my views for 2015? I think it'll be carry on as it has for the last couple of months, with the US dollar continuing to grow, continuing to gain strength. However, come June, when the expectation of rates raising, and there's a lot of variables in between that time, the stock market continuing on as it has, and oil price sort of stabilizing, gives us the June window. However, stock market falling, oil continuing to fall, June may not be the timeline. It could be September, October, or even 2016. However, this article talking of that, funds are coming back out of the emerging markets. That's been happening for a year and a half or more, since Bernanke headlined the fact that quantitative easing would stop. You've seen a massive shift of funds out of the emerging markets, such as Brazil, China, Philippines, Thailand, South Africa. Name a currency pair and you got it. and that shift is going back to the US and the US assets. That I see to continue to happen. Now that they're not got quantitative easing and they're looking at sort of normalising rates in the next 2 years. I think this article highlights that well. 2015. So the last 4 to 6 months, we've seen some great trends in the currency pairs. The Aussie dollar falling, euro sort of trending sideways, pound's been or euro sort of trending down. The pound's been a bit of a housey father to trade. Yen's been beautiful to trade. Kiwi's also a bit housey father, and the CAD's been beautiful to trade. So all the majors have been having wonderful trends on the back of the US dollar's strength. I do see that continuing for the first sort of 6 months of next year. The back end of next year is a little harder to sort of see once they start raising rates. But the fact that they don't have, they're not printing cash madly as they were, and the flow of funds is now sort of starting to normalise and going back into the US, I do see good trending conditions to continue, especially in the majors. The pound is a little bit more sideways because it's a lot stronger than all these other pairs, whereas all the other pairs are clearly a lot weaker. Kiwi's a little bit more how's your father as well because of their higher interest rates and their muppet of a central banker who thinks that he should be raising rates. Can't believe when he said that, half an hour after he said that, this is when he said, yeah, we're looking to raise rates because everything's honky-dory. Half an hour after that, he comes out and says in a phone radio interview, saying, I don't know why they bought the dollar, 100 pips. Yeah. Well, mate, you don't understand the job you've got. So with that higher rates, the Kiwis maintaining a bit of strength, which makes the Aussie Kiwi interesting because no one would have thought it'd get through 105. But the Aussie Kiwi could easily continue to fall and get down to parity, with the Kiwi being held up, Aussie continuing its weakness. And the pound should continue maintain some strength because they're doing all right economically. So, I would continue to sell euro. I'd continue to sell the yen, and the Canadian is a special little one itself because they gain a lot of strength out of the US strength. Sure, they get knocked around by oil price, but 80% of their export market, 80% of their exports go directly to the US, and if the US are buying more and more of their stuff, then obviously they're going to feel the benefit of that. So it may not be as simple to trade as it has been, but generally I do, for the next 6 months, I do see the trends continuing and opportunity. And when you get nice trends like that, it's money for jam, really. When things go sideways or crap shit like this, that makes it difficult to sort of make a buck. So I know you're online, mate. I'm glad you found the intellectual challenge. A lot of success for you, and we look forward to that turning into commercial success, as you suggest. But I hope I kind of answered your question there. Given if the stock market does fall, you'll see safe haven flows, so the yen will strengthen, i.e. this will fall, the Swissy will strengthen. I do see the stock market as a bit toppy. S&P 500 did a lovely high test on Friday off previous highs, but it is overdone, and the Christmas rally is pretty much all done and dusted. Everybody's got into their positions or out of their positions now, and from here until sort of mid-January it's going to be very quiet. But if we look at the S&P 500, which is here, we can see it's getting pretty overdone up here, and then it's pushed up there on Friday night but came off. So I don't expect this trend that's been going on for 4 years to keep going on forever. However, if the assets flow continue to go back into the US, then yes, it will. So I'd be keeping an eye on the stock market and its strength, weakness, and also the commodity markets, because over 2014, the commodity market was the headline, as you know, iron ore price fell, oil price fell, everything was tanking in commodities. So they're keeping an eye on that would be beneficial for throughout 2015, because that will upset the sort of apple cart quite a bit. But yeah, I just closed that article. I'll find it again and I'll email it out to you guys. Yeah. You could just do a Google search of his name, actually. Yeah, don't worry. I'll email you the article. And thank Brian for sharing it with us. Okay. So now just to the emails. As I said, we've only got a couple. A couple from today and a few from last week. Sorry. So this gentleman has been monitoring this one for a few months now, and we can see he got three different fibs. Fib 1 is down across here from that Fib 1 to the low. Fib 2 is from that peak to the low, and Fib 3 is that peak to the low. And we've got the 382, basically the 50 off Fib 3 and the 382 off Fib 1, all coming in as a Fib cluster. Long-term downtrend channel just completed phase 2, or back across the channel. Strong resistance, yeah, certainly really struggling to get through there, and starts to look like it's in another short one. This is CAD Swiss, right? So wanting to see the CAD weakness to continue. When you do crosses, and most of the questions today are about crosses, you should be looking at the majors. So look at the CAD and see what it's doing, and then look at the Swiss. Have a bit of an understanding of what's happening between them. So RSI bearish divergence. Yeah. On the weekly time frame, that's all sort of does seem valid. You come to the daily, and what have we got? You've got this almost head and shoulder pattern. Left shoulder, head. Maybe this is coming back to form the right shoulder. Comment in your email is saying it's just confirmed a breakout of this distribution, which is your square here. And this is your resistance zone. And now you're just looking for sellers to come into the market. Not sure why you wouldn't go for the lower trend line across here, the weekly thing, but your risk reward is 2.78. That's okay, depending on getting that bearish price action or the selling in the market, which, to be honest with you, I'm not sure if you're going to get here. You might get it up around sort of 85, 86 in this cluster zone again. The momentum is sort of just ticking back up again. Excuse me. And oil price has bounced. It bounced 5% on Friday. It's not going back to 100, but if it does get back through sort of 60, you might be looking at 70. And that would support the CAD. So you can see through this period here, with oil coming off, the CAD was weak, but the Swissy was also weak thanks to the Eurozone weakness. So there's a battle of who's the weakest across here. And fundamentally, whilst the Swiss are defending their currency against the Europeans, I can't see them being stronger than the Canadians if commodities do bounce, and certainly not stronger than the Canadians as the US continues to grow. So whilst that long-term down channel is valid that you're sort of looking at, all trends can change. So Yeah. Fundamentally, I don't know, but if the selling comes in, your technical analysis is valid, and it could be worth an opportunity. I've got nothing wrong with your approach to it, other than fundamentally, I don't think it'll happen. But your technical analysis, you can't really fault at all. So just be looking for a short price at off a reasonably strong horizontal, sort of around 86, and yeah, all good. Okay. Hey, cheeky little shit. Um, all right. So pound Aussie. There was a question on the pound Aussie on the 4 hour. This email came through this morning. I see a possible trade coming up on the pound Aussie 4 hour. Had to pull back down to the trend line. And looking for buying in the next bar. The daily fib has been passed, and I don't see a horizontal resistance. Looking at the monthly, is in the region of resistance. I found at 190. Let's call it $1.97. Um, I have a monthly extension at 2. I'm confident the pound will continue rallying against the Aussie, with $2 being a significant resistance, even though I don't see much support or resistance of this level in the past. My only concern is the charts has been fairly cyclical up until Thursday, when it's been flat, which also made RSI flat, but there's a lot of room for movement. Well, first thing is we should be looking at the daily and seeing what's going on, and way overdone, right? Another thing you should be looking at is how is the pound. We've got it on the lower end of its range, but it's still range bound, and the Aussie is under pressure, um, showing some divergence, and has had as well beyond its extension zones. 81 is a bit of a support level, not as strong as 80, but it is a bit of support level. And I do kind of see the Aussie back up to sort of 84, and then maybe back down again, but that isn't showing in price let just yet. So, with that in mind, it's the pound has got more downside available to move than the Aussie. So if it does break lower, then I'd say it'll move faster than the Aussie has, because it's already overdone, if that makes sense. So I wouldn't necessarily buy into this trend continuing, not when you're sitting up here. So strength, obviously there's still a lot of buying there, but that's more the Aussie weakness than the buying. You say there's no horizontal. I think there was around here somewhere, and unfortunately my my MetaTrader is not going to give me the data, but there's a monthly fib, gives you 50% retracement, sitting at 93.50, which 93 being the high. To me, that's a reasonable resistance level. Will it get through there? Who knows? Does that give you enough room on your 4 hour for a, you know, a likely trade? Not in your risk reward scenario. And yeah, not too happy with it just sort of going sideways for so long. Um, I think that's a low probability trade. Technically, you're probably right, but it's a low probability trade. Looking at yours, the gap down, that's right. Strong trend line. Is there a strong support line that it's trading from? Is it, well, you'd say this previous high is a good support line. So you want to see it above that, preferably probably above this area here, which is, what's that area? 92, yeah, around 92.30. I see that buying. There is some upside left in the 4 hour because it's just been going sideways. It's sort of worn the momentum out, but yeah, I find that a little tricky, that one. And if they get tricky like that, I prefer to move away from them. But that's just my approach to the market. To me, if it's not a simple, easy identifiable entry, then it's not something that I would consider. Kind of hope that helps. All right. Fairly cyclical, and then it's just gone flat. Yeah, that'd be my concern too. But more so what the daily is doing. Right. Okay. Mate, you're online. Is there anything that you don't understand from what I said, or you want me to continue? Okay. Well, Kiwi yen was the next one. I placed a small. This came in last night, so you would have seen this high test bar last night. Yeah, this one here was easy to see. Placed a small just above the high of the 17th, 91.95. Okay, cool. All fine, but the daily on the Friday is a seller bar and it's coming back to the purchase point. Okay. Remember, one of our rules is if it is a test bar, we have the option of moving our stop. Alright, I'm feeling that as if it dropped a third of the way between break even and my stop, and it looked to be a little seller action, then I'd want to reduce the trade by half, but I don't have a strong logic for this. Okay. We don't have two consecutive buy bars. We don't have a reversal bar yet. We do now though. But you do have a test bar. However, is it really testing anything? I don't see it as testing something. Unlike that sort of the pound one, to me this is the ideal entry, and you should have been looking at this as a potential trade. When it comes back and retests a clear support level, which is this previous high. If we look at the weekly, it was hasn't been through that for a long time. So that's a clear high. If we go to monthly, yeah, there's some resistance up here, but that's miles away, right? In the scheme of things, your risk reward, if you look at it like that, is certainly 1 to 3 or thereabouts. And what are we looking at? 250 pips for 500, so at least 2 times your risk. But that's a great support level, and it's come back to it beautifully, and so that's the ideal opportunity. That's the sort of no-brainer entry that you look for. Now the question is, if I had my stop sort of under here, I'm not going to do that. If I had my stop under here, which is the logical place for it, yeah, and you got in there, yep. So you're almost at break even. So the question is right, how do I manage this trade? It's a test bar, but is it really testing anything? I don't think so. I think, and if you look at it would have been just in the last hour of trade. Well, maybe not just the last hour of trade. So sort of, this bar here, you see, if you look at the Aussie, that bar there on the Aussie was the last bar was big move in the US right in the last sort of hour of trade. Yeah. So We can see there was quite a large move there. Had that not been there, that would have ended up like a doji bar, not a test bar. So I don't see it as really testing anything, and so therefore it's not a concern for me. However, if you are concerned, my best suggestion is don't move it to break even, because you've got a good chance of getting taken out today. If you are concerned about it, I wouldn't even look at reducing your exposure, but I would look at reducing your stop loss. Right? So then, where can we find a level that's valid for our stop to be? If your stop is 200 pips or so, then maybe making it 100 pips by halving it, right? And that would bring it underneath that level there. Underneath that, is there a support level there that you can hide it behind? Well, seems to be a high there and a low there. If we look at the, yeah, not a very strong level, but certainly something worthwhile. If you are concerned about this trade. Personally, I think that leave the trade where you stop where it is down here. You now have a reversal bar. Tomorrow morning, I'd be looking at halving my stop to this, because this test bar, whilst the rules say okay, if it's a test bar, we can move our stop, wasn't testing anything. So I'm not too fussed about that. And as you suggest, the fundamentals on the yen are still in place, still valid. So you want to stay in this trade, and I agree with you. So if you're concerned about it, move your stop now. I certainly wouldn't go to break even because you get taken out. But tomorrow morning you have a stronger reason, which is a reversal bar, i.e. lower high, lower low, and you can move your stop to it then. I mean, at this stage is a reversal bar. It may end up being an engulfing bar. Who knows? Yeah. Got it. Good. Sweet. That then brings us to the final one, which was the Kiwi yen again on the 4 hour. And this was sent in as an analysis on Friday morning, very early in the morning at 7 o'clock, before the bar had finished, the daily bar had finished. Right? My concern about this is, the technical analysis for the 4 hour trade, you're looking at having 1 cycle, 2 cycles. You're looking to go short on this. And to me, not sure exactly. There's a few things. Well, why your entry is here, I don't know. That doesn't make sense to me to get in there. And stop losses up there. That's okay because I can see that it's above this bar here. Why are you getting in there? It's beyond me. These purple lines would suggest that you're looking at this as a reversal divergence. And if that's the case, you should not be looking at where you've drawn the purple line here. Reversal divergence at the end of phase 1 is, so you're looking at this high to this high. Then you look at the highs in the momentum. That's reversal divergence. Here, where there's obviously no clear divergence anyway, I'm not sure exactly why you're looking at drawing that there. That doesn't make any sense to me whatsoever. Yes, you've got trendline resistance. You've joined 2 peaks and you've got it reacting to the third. But there's no real strong horizontal here. There's nothing there. And you've got this cycle, okay, sort of the 61.8 is playing with at the moment. However, the biggest concern is that looking at it in the daily time frame, I mean, you saw that horizontal level I put in. Friday's bar, this is Friday's bar here, so you've already seen on the daily, you've seen this ring low and the market start to accelerate. This is why I insist on you guys doing your daily analysis before you even bother looking at the shorter time frame. Right? And we can see, hey, it's bounced off this strong support level. It's bounced off the 50 fib. It's bounced off the 50 EMA. I should be looking at going long this, not going, oh shit, good cyclicity on the 4 hour. Let's get short this. And had you also noticed there what that bar is, which is the bar that you traded on, this bar here, had you waited for that bar to finish and gone and placed your order underneath that bar, instead of just going in at market, which is what it looks like, that bar would have been is a low test bar, and you wouldn't have got into the trade anyway, which is desirable. You've now in the trade and stopped out for a loss. And yeah, I don't see any strong horizontal that you want to short off anyway. Seeing the cyclicity on the 4 hour now, I'm going, well, hang on a sec, I'm not in this trade. If I get support here, I might take this long. So what concerns me is that there was no analysis of the daily, or if the analysis of the daily was done, it was done with the bias of I want to be short, and that's clearly not the case when you look at the daily. It's you want to be buying this for all your money, not with all your money. I shouldn't say that. That's irresponsible. But it's a very strong buy signal, and you're looking to short. I do insist when you're trading trading the shorter time frame. Excuse me. You got to be going with the sentiment of the daily. I've said that time and time again, and clearly the sentiment on this is strong, bullish, and that's a normal signal that we would take to go long, as the previous trader and analysis was looking at. Trading this on short doesn't make sense at all. With the Kiwi yen, another option is to use the ATR trailing stop at 90.85. Yeah, if that's if you're using an ATR as your entry purposes, then yeah, you could have a trailing stop 90.85. I'll put it around here somewhere, which is roughly where I would have, if you're going to move the halve your stop anyway, it would have been around that price. Point I was trying to make with this is that I don't see this high test as a strong enough reason to move your stop, whereas this reversal bar is, and it's because this wasn't really testing anything. Okay, so I can see you've got that fib is this fib that you've drawn from here is the daily fib. But I don't know if you've done your full analysis on the daily, because you surely would have seen, hey, hang on a minute, it's come back and tested a pretty strong support level, tested the 50. And it's also testing a fib that you have identified, the 50 retracement. And so I'm not sure why you're looking for shorts. The only thing I can think is that you've seen there's 2 cycles and go, oh, well, there's a third one there. Well, then if that's the case, there's no way you should have rushed into the trade at that point. You did. You should have been waiting for this bar to finish. And if you had waited for that bar to finish, you wouldn't have got into the trade, because that bar has just ended up being a low test. Yeah. Okay. So that's it for today. Being Monday, there's obviously not a lot out there. I might keep that on there. There's that 4 hour swings this afternoon. Might take that higher. You've got your first cycle above the 50 EMA, yeah. And as I said, I'm not in this trade. I was too busy having fun last week to trade. Just need to see some strength and off a horizontal level, such as these previous lows. Yeah, there's a bit of a support there, resistance support. Yeah, keep an eye on that one. Excuse me. Yeah, okay. Mondays are always a little difficult, so in terms of intraday trading, and there's nothing really there that I don't have any positions. I'm not in no rush to sort of really get a position over the next 2 weeks. Actually, over the next 3 weeks. So it'd want to be a pretty good setup for me to take it. But otherwise, be safe and good, and I'll chat to you guys on Wednesday. Can you shed some light on the spike in the Euro Swiss? Yeah, the Euro. What I'm going to do is going to shed some light on the Euro Swiss. Right, I'll bring the chart up, and if you guys watch the news regularly, Euro CHF SNB rate. There we go. 3 days ago, they raised lowered interest rates, and so that weakened the Swissy quite a deal. And if you read this article, looking for a broker. No, I'm not actually. Thank you. If you read this article, and that was just a simple Google, right? They also talk about maybe it wasn't this article I read, but I did read an article on it that suggested that this is not their, they're going to protect that and continue as the Swiss went negative rates, but they're in doing so they can either continue to meet negative interest rates or lower them even further negative, or raise the ceiling. Now, I did mention that some months ago that they might do that. That hasn't happened. Perhaps they're looking at doing it now because that floor is. There's still a lot of strength in the Swissy because people would prefer to own Swiss dollars rather than Euro dollars, and the Swiss National Bank is trying to reverse that concept. So to make it more expensive for them to own Swiss dollars, then that hopefully will drive their currency weaker, and that's what that spike is. Yep. This is why we read the news on a daily basis if we can. Yep. No worries, mate. Must be getting busy down your way anyway with the Sydney to Hobart lining up. I hear it's going to be a bit of a choppy one. Weather conditions not all that favourable. Right, I'll email that article out about the Fed and the link for the YouTube video. You guys be safe and happy, and I'll talk to you Christmas Eve. Well, in the morning of Christmas Eve. Wednesday morning. Alright.